Yo, you just click on the only SSMT video you'll ever need. Unlike any other videos on YouTube, here you'll find the only information you actually have to know about the SSMT, no BS. And if you already know what SSMT is, I'm sure you'll find something new for yourself. And if you're new to this concept, this is the best video to start learning with, so take some notes. But before we start, subscribe, like the video, and drop any comment below to participate in a free premium access giveaway. And now let's get started. But before we talk about sequential SMT, we want to understand regular SMT first. So if you don't get this part, the rest will not make any sense for you. So what is SMT? SMT is a reversal sign. You want to see it every time before you take a trade. And here how it works. You watch two correlated assets at the same time. For example, NQ and ES. One asset sweeps a high or low, the other one fails to do so. And the asset that sweeps is your stop hand, the other that fails is your fair swing. Just keep it in mind. Um, it doesn't really matter how you call it. Just keep it in mind. Said the asset that sweeps is your stop hand, the other that fails is your fair swing. And the asset that fails is usually the stronger one, and it will lead the move after the reversal starts. So remember this rule: no SMT, no trade. You enter after SMT forms. You exit when the you see opposite SMT on the other side. That's the whole concept. And now let's see what happened when SMT forms between two quarters. This is when sequential SMT comes in. But before we learn about SSMT, we want to know our triads. A triad depends on what you want to trade. And this is very important because SSMT only works when you compare the right assets. A triad is a group of assets that move together, same market, same direction. You have three main triads. The first one is indices, ES, NQ, and UM. This is the main triad. Most example in this video will come from this group. The second one is metals, gold futures and silver futures. Same idea, these two move together, so you look for divergence between them. And the third one is Forex, Euro futures, British pound futures, and DXY. This is one a little bit different. DXY moves inverse to euro and pound. So when you mark your levels, you flip the logic. A higher DXI lines up with a low on the other two. That's it. Three triads. Pick your market and compare the assets inside it. And when the one asset sweeps a level and the other fails, that's where SSMT forms. So now let's actually talk about SSMT. All right, now the SMT and triad concepts are clear. So let's talk about SSMT. So sequential SMT is SMT that forms between two consecutive quarters. So between Q1 and Q2, Q2 and Q3, Q3 and Q4, and Q4 into Q1 of the next cycle. And here is a key rule for SSMT. You mark the extreme high and extreme low of the previous quarter, not a random level, not something in the middle, only the absolute high or the absolute low. Then, when the new quarter opens, ask yourself these two questions. Does one asset break that level? Does the other one fail to reach it? One breaks, one fails. That is your sequential SMT. And here is something important. The highs and lows do not need to form at the same time on both assets. What matters is simple. One runs the level, one does not. Knowing this, we can plan our trades with a simple logic. If you're looking for a longs, you want the SSMT to form below the true open. For example, the true day open. And if you're looking for a shorts, you want SSMT to form above the true day open. Why? Because the true opens work as premium and discount measure. And if price is above the true day open, we are in a premium zone. If price is below, we are in a discount zone. So if you don't know much about the true opens, go ahead and check out my previous video. And I also have some studies on my site. It's completely free. All of the links are going to be in description. But now let's talk about the hidden SSMT. All right, now you know what SSMT is, you know what SMT is, and you know how to measure the premium and discount using the true opens and blend it with SSMT. But there is one more type of SMT, which is hidden SSMT. Hidden SSMT is the same idea, but with one big difference. It forms with the candle bodies, not wicks. Remember, a regular SSMT is a week-based sweep. One asset sweeps a level with a week, the other one fails. With hidden SSMT, it works like this. One asset closes above or below the previous quarter's high or low with its body. The other one fails to do the same. Same logic, one breaks with the body, one fails. Now, here's the important part. The hidden SSMT carries lower probability compared to regular SSMT. So we always give priority to the regular SSMT. Think of it like this. Regular SSMT is your main signal. Hidden SSMT is a backup signal. If you see both on your charts, trust the regular one first. That's hidden SSMT. Simple concept, but good to know when you read the charts. And now let's move on to the core functions of SSMT. What are the core functions of SSMT and why do we even use it? There are four main reasons, and reason number one is SSMT filters low probability setups. If there is no SSMT, you skip the trade. This alone will save you from many bad entries. So as long as we know that SSMT is a reversal signature, we want to execute the trade only if SSMT is present. So we are not looking anymore at any randoms, I don't know, like confluences such as order blocks, FVGs, and everything else from the ICT. We blended with SSMT and then it will make sense. So for example, you have the fair value gap, then you have the wicks that tapped in the fair value gap and we form the SSMT. This is your extra confirmation for the entry that this tap in VVG was only the retracement and we are ready to reverse and keep going higher. So that's just an example. You can apply this logic to a lot of trades. For example, I have my model, which is two stages SMT. It's a little bit different and, you know, a little bit more complicated. We're not going to talk about this in this video, but I'm about to post the whole breakdown for my own model in the future videos, which is going to be the next video. So just stay tuned and keep watching. So, and then the number three is SSMT confirms market profiles and manipulations. When you see SSMT after a stop hunt, you know the manipulation phase is done. So again, we have the two main market profiles, which is XAMD or AMDX, and knowing that we expect our SSMT, which is going to be our confirmation for manipulation, we can anticipate and predict the move of distribution, and we can actually execute the distribution move. So SSMT confirms our market profiles. And the number four, SSMT identifies institutional order flow alignment. When two correlated assets diverge, it means smart money is choosing a direction. So SSMT is not just a signal, it is a filter. It is a confirmation and a timing tool all in one. Now let's compare them side by side, SSMT versus hidden SSMT. Look at the left chart. This is a regular SSMT. And here, the sweep happens with a week. Price take the low of the previous quarter with a week, and the correlated asset fails to do so. This is your classic high probability signal. Now, look at the right chart. This is your hidden SSMT, and here is no weak sweep. Instead, one asset closes above the previous quarter high with its body, and the other one fails. So, the difference is simple. SSMT works with weeks, hidden SSMT works with bodies. And now, what does it mean in the practice? A regular SSMT is a stronger signal. A weak sweep means the market grabbed liquidity and rejected the level fast. So it gives you a clean reversal and better entries. And hidden SSMT is a weaker signal. A body closes through the level, shows less rejection. So the reversal is less reliable, and the move can be slower or fail more often. That's why in the practice we trade regular SSMT as our main setup. Hidden SSMT is extra confirmation or backup when there is no regular SSMT on the charts. If you see both at the same time, always trust the regular SSMT first. That's the full picture. Now you can spot both types on your charts. Alright guys, I'm here to show you the real power of SSMT, and this is actually crazy how SSMT always present before the real market move. Okay, so if you're gonna go from the higher time frame, which is in my example is going to be from the 4 hour to the 1 minute time frame, you will always see the SSMT formed before the real move happen. So I do have my own indicator, and that's how I look for SSMTs, and that's how I'm going to be showing you right now. But if you don't have the indicator for SSMT, you can do it manually, just splitting two charts. Personally, me, I built this indicator to simplify my trading. Also, it has like all of the concepts um, I need for my model like show plus one cycle SSMT, which is two-stage SSMT. It has PSPs, QCs, true opens, previous cycle high and low, previous day high, previous day midpoint, session high and lows, new week open gaps, SDDV, custom watermark, all what you need for quarterly cycle trading. And I'm just here to show you the real power of SSMT. And as you can see, SSMT always present before the real moves happen. So here, the monthly cycle sequential SMT formed, and then the real move started. If you go to 1 hour, which is our weekly cycle, you will see like we have the weekly cycle sequential SMT before the move happened. We also have here the weekly cycle sequential SMTs before the move happened. And if you go to the 15-minute time frame, which is daily cycle, you will see SSMTs present as well. So SSMT formed, PSP confirmed, move happened. SSMT formed, PSP confirmed, move happened. And it just like on any single time frame, you're going to see the same thing every single time. SSMT form, move happen. SSMT form, move happen. Every single time before the real move, it's going to be SSMT formed. There is always going to be SSMT. Here SSMT, here SSMT, then move. Here SSMT, then move. Here SSMT, and then move. And if I go to the 1 minute chart, which is my microcycle, I'll still be able to see how SSMT are playing out. So even now, right now in the live, we have the microcycle sequential SMT, then we have the microcycle QCs, and then the moves started happening. Obviously, for the setup, you need something more than just SSMT. It could be like PSP plus SSMT or like two-stage model. How I use it, for example, I use show plus one cycle SSMT, and then I'll be able to see if there was like any 90-minute cycle SSMT present. I would be able to see that we have higher time frame, which is our mid time frame, and then the lower time frame as well. So SSMT is a very powerful tool. Build your own model based on the confluences such as PSPs, which is going to confirm your SSMT. You can build your own model with any other confluences such as SMT fields and much more. But or you can use just my model. Video about it, as I said before, is going to be posted like pretty soon. Um, it's going to be the next video, or you can join the Espada Premium access and learn my model with me. Okay, so what happened if SSMT fails? Indicator just removes it. Okay, so, yeah, go check out the indicator, go check out my free studies, go check out my site, and that's pretty much it for SSMT power. All right, guys, thank you so much for the watching. I hope that was helpful for you all. If you want to learn more about the quarterly theory, the free studies link is going to be in the description. If you want to learn quarterly theory on a deeper level, or use my model, use my indicator, or build your own model with my help, join the Espada Premium Access. You can also get the indicator separately if you would like to from the Espada Premium Access. If you think that you already know enough about the quarterly theory and you just need the indicator, you can do it as well. But anyways, thank you for watching. Drop the comment, please subscribe to the channel and put the like, so you can win the free premium access, right? And I'll see you soon. Take care and peace out.